The modern world is a challenging place, where big data threatens big creativity. The big screen is threatened by a small screen. Long-term value is threatened by short-term goals, where technology becomes the job destroyer, where a great reputation can be damaged by a PR disaster, where one dominant voice is challenged by millions, and when everything you know is in a state of flux, whom can you turn to? The compass of the marketing communications industry. The International Advertising Association. IAA is the global platform that brings together marketing, creativity, media and technology in the service of consumers, unleashing the power of brands to make a difference to their lives by inspiring, educating and celebrating creativity in all the fields of our industry. Since 1938, IAA has guided the marcom industry through changing consumer behaviour and media proliferation, through recession and repression of free commercial speech, through globalisation, digitisation and whatever comes nextisation, with a one-of-a-kind network embracing the common interests of advertisers, agencies and media. The IAA helps navigate today's challenges with an unshakable belief that creativity enriches people's lives and makes the world a better place. When you want to head in the right direction, you need a compass. IAA, the global compass of marketing communication.
What makes a hero a hero? Stepping up to help, time after time after time, with grit and compassion, without any superpowers at all, because they're not the heroes of some fictional world. They're the real-life heroes of ours. And this World Humanitarian Day, we thank each and every one of them.
The modern world is a challenging place, where big data threatens big creativity. The big screen is threatened by a small screen. Long-term value is threatened by short-term goals, where technology becomes the job destroyer, where a great reputation can be damaged by a PR disaster, where one dominant voice is challenged by millions, and when everything you know is in a state of flux, whom can you turn to? The compass of the marketing communications industry. The International Advertising Association. IAA is the global platform that brings together marketing, creativity, media and technology in the service of consumers, unleashing the power of brands to make a difference to their lives by inspiring, educating and celebrating creativity in all the fields of our industry. Since 1938, IAA has guided the marcom industry through changing consumer behaviour and media proliferation, through recession and repression of free commercial speech, through globalisation, digitisation and whatever comes nextisation, with a one-of-a-kind network embracing the common interests of advertisers, agencies and media. The IAA helps navigate today's challenges with an unshakable belief that creativity enriches people's lives and makes the world a better place. When you want to head in the right direction, you need a compass. IAA, the global compass of marketing communication.
What makes a hero a hero? Stepping up to help, time after time after time, with grit and compassion, without any superpowers at all, because they're not the heroes of some fictional world. They're the real-life heroes of ours. And this World Humanitarian Day, we thank each and every one of them.
Through globalization, digitization, and whatever comes nextization, with a one-of-a-kind network embracing the common interests of advertisers, agencies and media. The IAA helps navigate today's challenges with an unshakable belief that creativity enriches people's lives and makes the world a better place. When you want to head in the right direction, you need a compass. IAA, the global compass of marketing communication.
What makes a hero a hero? Stepping up to help, time after time after time, with grit and compassion, without any superpowers at all, because they're not the heroes of some fictional world. They're the real-life heroes of ours. And this World Humanitarian Day, we thank each and every one of them.
The modern world is a challenging place, where big data threatens big creativity. The big screen is threatened by a small screen. Long-term value is threatened by short-term goals, where technology becomes the job destroyer, where a great reputation can be damaged by a PR disaster, where one dominant voice is challenged by millions. And when everything you know is in a state of flux, whom can you turn to? That brings together marketing, creativity, media and technology in the service of consumers, unleashing the power of brands to make a difference to their lives, by inspiring, educating and celebrating creativity in all the fields of our industry. Since 1938, IAA has guided the Marcom industry through changing consumer behaviour and media proliferation, through recession and repression of free commercial speech, through globalisation, digitisation and whatever comes nextization, with a one-of-a-kind network embracing the common interests of advertisers, agencies and media. The IAA helps navigate today's challenges with an unshakable belief that creativity enriches people's lives and makes the world a better place. When you want to head in the right direction, you need a compass. IAA, the global compass of marketing communications.
What makes a hero a hero? Stepping up to help, time after time after time, with grit and compassion, without any superpowers at all, because they're not the heroes of some fictional world. They're the real-life heroes of ours. And this World Humanitarian Day, we thank each and every one of them.
In 1938, IAA has guided the Markham industry through changing consumer behaviour and media proliferation, through recession and repression of free commercial speech, through globalisation, digitisation, and whatever comes nextisation, with a one-of-a-kind network embracing the common interests of advertisers, agencies and media. The IAA helps navigate today's challenges with an unshakable belief that creativity enriches people's lives and makes the world a better place. When you want to head in the right direction, you need a compass. IAA, the global compass of marketing communications.
What makes a hero a hero? Stepping up to help, time after time after time, with grit and compassion, without any superpowers at all, because they're not the heroes of some fictional world. They're the real-life heroes of ours. And this World Humanitarian Day, we thank each and every one of them.
Good evening, Malaysia and Asia Pacific. Good morning to the US. Good afternoon to those in UK, Europe and Africa and other parts of the world. We are really honored to have over 400 registrants on this webinar. Welcome to the International Advertising Association IAA studio in Kuala Lumpur, Malaysia. My name is D Chacko, President of IAA Malaysia and the host for this evening's webinar. We are really pleased to bring you this four-part webinar series themed Brands Matter. Today we talk briefly on the subject of brand trust and announce the Brand Finance Malaysia 100 2020. In December, we present the We Love Brands campaign and speak to a panel of custodians on their perspectives on why brands matter. Next year, we hope to bring you the Brand Finance ASEAN 100, followed by the Brand Finance Malaysia 100 2021. Today's webinar by IAA Malaysia will comprise a brief introduction from me on why brands matter and the role of brand trust. This will be followed by a 35-minute presentation by Samir Dixit, MD of Brand Finance Asia Pacific, on Malaysia's top 100 brands, followed by a 10 to 15 minutes Q&A session. Please feel free to submit your questions via the chat box on the webinar. Now, before I hand over to Brand Finance, I would like to talk a little bit about the subject of why trust matters. The pandemic has stymied the global economy, affected the health and livelihood of many people across the globe at an unprecedented scale and created disruption on a level never seen before. Borders are closed, tourism is at a standstill, aircrafts are grounded, education has gone virtual, consumer purchases from laptops to phones and even cars in many cases are via virtual tour on screen, and contactless telemedicine is on the rise, just to name a few. Brands can play a strategic role in fueling our recovery through its innovation, creativity, technology, education, and generating income not just for the society but also for the economy, and providing real solutions to people's problems. Brands can serve as the engine for economic revival because in brands we trust. Now, trust is not new and has been important all along. It is one of the key ingredients towards brand love. In these uncertain and unpredictable times, trust plays a much bigger role. So when the consumer wallet is under pressure like never before, there is lesser capacity or discretionary spending freedom. Consumers have to choose, look for lower cost alternatives, stay with what they had, or pivot to brands they trust. Now, every dollar counts, and in many cases, consumers tend to gravitate towards brands they trust because there's little room to experiment. Trust provides consumers with peace of mind that they have made the right choice. Consumers will remain loyal to brands they trust. So the question for us as brand custodians is what fosters trust? There are several factors, but let's focus on some of the very current issues that may matter to consumers, especially now. I referred to the Edelman Brand Barometer 2020 in a special report on brand trust and the coronavirus pandemic, conducted across 12 countries, which revealed that 71% agreed that brands and companies that place their profits before people during these crises will lose their trust forever. Now, in reading this, a burning need that has immediately comes to my mind is how accessible and affordable will the highly anticipated COVID-19 vaccine be? Accessible and affordable. This must surely be a test of our commitment to humanity by making sure that everyone who wants it gets it and can afford it. Companies and brands that do the right thing will win the trust of consumers. Now, brands must also take a stand on what matters to people. Things that matter to people including climate change, environmental issues, diversity and inclusion, gender equality, health, privacy, livelihood, and the burgeoning illicit trade practices and more. Brands and companies cannot sit on the fence waiting to see what others will do before they act. Now, when I talk about what matters to people, two examples comes to mind. One is a somewhat controversial campaign featuring Colin Kaepernick taking the knee, followed by Nike's "Just Don't Do It." Now, both of this took courage, underpinned by a relentless conviction to their brand values. Now, brands must also show that they care by expressing sympathy and support for the plight of people. That same report revealed that 83% agreed that brands must show that they care for those most affected by the pandemic to earn their trust. And it's not just that. 1 in 3 alleged to have already punished brands they felt did not respond well and show that they care. Brands must show that they genuinely care to win the trust and respect of consumers. Now, another significant concern for consumers is privacy and fraud. Brands must respect the privacy of consumers in handling the protection of sensitive personal information provided by customers in the course of everyday transactions. And this affects all of us. This also extends to digital fraud, which is on the rise. Another area that's quite prevalent is the area of illicit trade. Protecting consumers against the illicit trade, be it counterfeit or contraband, which has found renewed fuel during this pandemic across multiple categories and is growing. Consumers expect to get what the brand promised. Brands also have a responsibility to protect the authenticity of products within its stable for the protection of consumers and the significant contribution these brands make to the economy. So in conclusion, 60% of people are turning more and more to brands they trust, especially in times of crisis. To win this trust, brands need to not just talk the talk, but more importantly, walk the talk of their brand promise, which will lead to increased consumer preference, loyalty, and brand valuation. Now, talking about brand valuation, which is the primary focus of this webinar, I would describe it as the confluence of both the tangible and the intangible assets of the brand. You could say it's the sweet spot or the meeting point of soft power and hard power, which are equally important to the health of the brand. The intangible, or commonly referred to as brand equity, is centered on the importance of the brand looking through the lens of the customer, while the intangible is the financial value the brand carries. Now, surely bridging this divide is key to building strong, sustainable brand valuation. With that, I would now like to hand over to Samir Dixit, Managing Director of Brand Finance Asia Pacific, to reveal Brand Finance Malaysia 100 2020. Good evening, Samir from Singapore, and welcome to the IAA Brands Matter webinar. Welcome.
Hi, John. Thanks a lot. Thanks for having me over. It's wonderful to be here and share more about the brands during these trying times. Welcome, everyone. I think everything that John said holds extremely true and critical, more so now than it was probably a few months ago, before the pandemic started. I would just touch upon a few. Every dollar counts. That's how the management is looking at it. That's how the CFOs are looking at it. That's how the investors are looking at it. ROI will be more important going forward for everything that we spend. That sort of brings you back to the brand must deliver to the financials. It must connect the finance. It must connect the marketing expenditure to an ROI that is justified in dollar terms to the CFO, to the CEO, and to the board and the investors. John talked about trust, which is extremely critical. It's not new, but it is more important now, because if people trust the brand, they're more likely to stay with you now in these tough conditions than move away. And that has a very large impact on how the value is going to grow in the future. People will cut costs irrespective of what we say. I'm talking about the consumers, they are not so much the marketeers. They would cut costs, and then that's an opportunity where you can actually lose a lot of customers if the trust is not there, if they don't have you as top of mind, if they don't have the brand, if your brand is not so loved. So one needs to keep that in mind. A lot of people have asked me a lot of times, how should we go from here? Where should we go from here? How do we recover? How do we sort of manage these difficult times? Well, my view is very simple. The whole world is trying to recover, and that's probably somewhat is causing the problem. This is not something that you can recover overnight from. I think the right word is you just need to reset. A lot of times when you have a problem with a device or with a situation, just reset, take it back to zero and move on from there. Then you are looking forward, you're looking ahead, you're far more positive rather than, keep beating yourself about, oh, I'm down 40%, oh, I'm down 60%, or I'm down 90%. So I think some of the changing of the mindset is really going to help the world recover. I will touch upon a little bit on the COVID. Coming back to the brand value and brand rankings, we are going to share the top 100 Malaysian brands for 2020. A lot of the brands have done very well, so my congratulations to those brands in advance. Those who have not done well, don't worry. This is an annual thing. You will probably recover, though the times are difficult, so I'm not very sure about that. All right, we are in the ideas economy, and we've always been that way. A lot of the companies, the new companies, particularly the fintech ones, your Airbnb, your Ubers and Grabs of the world, they really don't have any product. What they have really is the brand, and that's why the brand matters most. We are in the ideas economy, and that economy is of the intangibles. The sooner we realize the value of our intangibles, the sooner we realize what drives them, the sooner we realize how critical they are for the growth and for competitiveness, the faster we can grow the value, come out of the crisis, and do a whole lot of things differently. Many times when I talk to people, everyone says, yeah, I'm spending a lot of money on my branding, and yes, I'm doing this and X, Y, Z. So what we see more and more is for people is branding is equal to brand and vice versa. People think brand is branding and branding is brand. Not really, I would say. Brand is a lot more than just branding. Branding is just your logo. You put it wherever you want to put it, whether it's your shop front. A brand is an experience, it's a whole lot of different things. So you need to be very careful when you're talking about brand. You're not just talking about an advertising, you're not just talking about a product, you're talking about a whole customer experience. You're talking about multiple stakeholders. I'm not even just talking about customers. You're talking to investors, you're talking about suppliers, you're talking about business partners, you're talking about employees, every one of them. So brand impacts every one of them. It benefits the organization in different ways. And that then brings the benefit to the how quickly and how well the brand will grow. I can't see my slides. Sorry, my slides have disappeared. Yeah. So it is a very, very powerful intangible, the branding and the brand, and it drives business value, it creates shareholder value, and it is also going to be under the maximum threat going forward. I'll explain how. Intangibles, well, if this was a session that, as we would have usually done in an auditorium, I would have asked for a show of hands to say how many of you actually know the value of your brand, or how many actually know the type of intangibles that you have in the business and how they're growing, etc. But different times. So intangibles are a critical value drivers. There are different types of intangibles that you can see. There's goodwill, there's artistic. I mean, most people just end up looking at goodwill. There's marketing intangibles, customer intangibles, contract. When we're talking about brand, we're talking about just one type of intangible here, which is the marketing intangible, right? Contracts, technology, all these. Then there are tangible assets. Most companies almost always end up focusing on the balance sheet, which is where the tangibles are. Nothing wrong with that, because that's the CEO's mandate. But guess what? The larger value, or roughly the same value, actually sits on the intangible side. So what is the percentage? Roughly, we do this study, we track 57,000 companies across 128 stock exchanges around the world every year. In fact, the 2021 is just going to be released tomorrow. Those who are interested can just write to us. We'll send it to you. And look at this here. So the green one is actually the tangible value, and the three gray, blue, and boxes are the intangible value. 48% of all companies' value is in the intangible. This is the global average. It hasn't moved much. In fact, it's gone down a bit, but after going down, it's still 48%. What does it mean for management or for all of you brand managers? Two things. One is there's an equally large value sitting within the organization that you are managing. So people who are managing entire business, so there are, let's say, 5,000 people managing the balance sheet, and that's the value that they're controlling, the 52%. And maybe just 5 of you sitting in some remote corner of a building are managing somehow magically this 48%, which is the intangible. So that's the challenge, that's the role that you have, and that's the message that the management needs to hear is, look, there is a very critical value there. It is an extremely large and valuable asset that we have, and it is almost 48% of our company's value. So if your company is worth 100 billion, this is 48 billion sitting right there, which maybe nobody's managing well, maybe nobody knows how it's growing, maybe nobody knows what the key drivers are taking it up or down. So that's the real importance of it, and that's the message that you should take to the management, to the board. Value is a very critical brand success measure. In fact, the rankings that we publish are the world's only triple certified. We have 2 ISO certifications, and we also now, the rankings that we publish are also certified by MASB, the Marketing Accountability Standards Board, as the marketing ROI. So if you go to the website, you'll see they have certified this to be a marketing ROI that should be shared with the management. I'm not going to get into too much of technical details, but there are largely 4 parts to the value calculation. These are the steps, but I'm just going to focus on the first one here, which is the brand strength. Only if a brand is strong, you'll have higher value. If your brand is weak, you may not necessarily have a higher value, or people may not be willing to pay too much for you. Now, there's a reason if I walk from in front of a coffee bean to Starbucks or the other way around and pay 20 cents more because I believe in that brand, I'm willing to pay a price premium, which is where the whole thing rests. A brand is a critical tool to command price premium. And if you're not able to get the price premium, if you're always discounting your products, if you think that's the best way to compete is by giving discounts to the customers, I think some of that thinking needs to be run through the our heads again to say, is that using the brand effectively or not? Because when you're using a brand, there's a reason why people would pay $2,000 for a Louis Vuitton bag with the logo, and the minute I remove the logo, probably nobody will be willing to pay more than $300 for it. As a fake, also it has a very high value, but if I remove the logo, nobody will buy it. So that's the power of the brand, is command price premium. And if that's not happening, there is something amiss there that you need to look at. So if I want to take a McDonald's franchise, for example, and the brand is strong, I'll have to pay more for everything. If I want to take a Moss Burger franchise, the brand is not so strong, I'll have to pay less for everything. So that's why the strength of the brand is extremely crucial. Who controls it? All of you, the marketing folks. The strength of the brand is controlled by the marketing people. Well, historically, everyone has been managing the brand equity, and you do the brand health trackers, etc. So how is this so very different? Two primary reasons. One is it's a more holistic score that can actually be applied across the organization, irrespective of product category, customer segment, geography, business vertical, etc. And that's the first challenge that you can overcome with this, because every department, every product manager, every geography, every business vertical may have a different set of KPIs, the measurements. This is one common platform that can be applied across everything. So that's why this is important. The second important part of the brand strength is that it combines your, so what you historically measure the equity, it combines the input and the output with the equity. So it outlines the correlation of the three. So it's a more holistic framework to look at. Well, there's a third reason also. This is now ISO certified, the ISO 2670. So we are one of the first companies to have the ISO certification for brand evaluation, which is this process here, which then leads into the value. So let's move on. Like I was saying, there's equity is what is historically measured. We combine it with the inputs, which is your investment, how much you're investing in the brand, and the inputs drive your equity, the equity drives the performance of the business, and that's the framework that comes together. So you will see in front of each of your value, there is also a brand strength score, which is a score out of 100. The lower the score, you get starts with a triple D here, goes all the way to AAA plus. So AAA plus, AAA, AAA minus, AA plus, AA minus, and goes all the way down to D. We haven't seen very many brands that get a B, but there are a few. Now the question is, are you a AAA or a AA or you're A, and where do you go from there, and how far ahead or behind are you from your competitors? So that's the important factor there for you to know and see. You will see the scoring there. Coming back to the top 100 brands, what's happening in the Malaysian market? The overall brand value has declined slightly, 0.4%. Not something very surprising, given that some of the onset of the economic challenges had started early in this year, and some of the brands, because it was a fag end of the year, some of the brands may have sort of cut down some of their spending, etc. But the total value is $55.9 billion. Now let me just put that, this is for all the top 100 brands in Malaysia. Now let me put that into context. Apple alone is worth more than $180 billion as a brand. And all the 100 Malaysian brands are only worth $55.9 billion. So that's how you need to look at it, because while it's a growing economy, the GDP growth is strong compared to some of the rest of the parts of Asia or even ASEAN, is the value that's not growing. Why is it not growing? Probably because the intangibles are not so much in focus. There are a lot of technical reasons for that. I'm not going to get into that, but there are reasons why, because there's a lot of marketing focus, balance sheet focus, brand equity focus, but value is still not a KPI. So much so. The big brands do that. So even if you pick up a HSBC report, for example, 10 years ago, you will see that the brand was one of the key priority for the board, and it was a KPI, one of the 20 KPIs for board's performance. The value, the ranking, etc. is mentioned in the annual reports, if you see. So that's how important it has been historically to the larger organizations. Okay, just looking at the split, where is the value coming from? We've seen this happen in most cases in Asia in particular. This is not the trend that you'll see in Asian countries. You'll not see a similar trend in probably Korea and Japan. Those are the countries that are way ahead in terms of managing their brand. You'll not see a similar trend in the US or in large parts of Europe. But Asia, it is very top heavy always. There are companies that are managing the brand very well at the top, and then there's everyone else, which is what you see here is also. So 55.9 billion, the top 10 only are much more than half. 64% is the top 10. So we're looking at 36% being covered by all the rest. Out of that, again, if you look at 11 to 20, there's another 14%. There's another 7% here. The bottom 50 brands are actually only contributing 6% of the total value of the top 100. That just shows how the focus of the brand isn't there as it should be. There's no reason why these companies, some of them have large market caps also. So it's not like we're talking about companies that are relatively small or the companies that are not doing well. They're all doing well, but it's just that they're very balance sheet business focused and not brand or intangible focus. Some sectors, oil and gas is of course number one, but that's obvious because Petronas is one of the largest corporates in Malaysia. We can't shy away from that. But look at the companies that are after that. Is banks, then telcos, then casino and gambling, Genting, of course, very popular. Then comes utility, automobiles, etc. And as you go down, and the sectors that historically have very high value in some of the other markets, media, for example, retail, for example, healthcare, hotels. Hotels have tangible to intangible value upwards of 56-60% of total values in the intangible. And I'll give you an example. Many of you must have stayed at Four Seasons hotels. Guess what? They don't own a single property. All they own is the brand. Their brand value to business value is 56% of the total value the company is in the brand value. Is one of the top 5 most valuable hotel brands in the world. They don't own a single hotel. They only license the brand, and it's a franchise model. So, but looking at the Malaysian context, the media, the retail, these are very high intangible sectors. But look at the just 1% overall, and that's something that should change. I always challenge people within the countries to say, topple the top 3 if you can. Get into the top 20. Have a target. Have a number in your mind to say, in the next 3 years, I'm going to be at this position with this value, and then you can really you can really get there. AAA, if your rating is AAA, what does it mean? It means you're extremely strong. AA, very strong, average, weak, and falling. So like I said, there are few brands which are B in Singapore and Malaysia as well. And that's a trend that we've seen recently. So the top brands are all moving more towards AAA. And there are brands that have now slowly started to move towards B also, which wasn't there 3 years ago. Telcos are more, they're stronger brands. So this is by sector. Banks come next, then comes oil and gas, then utilities, airline, and retail. Airlines, again, AirAsia is a very strong brand. So is Malaysian Airlines. Actually, as a brand, it's not that bad. It's the business that's suffering. Singapore Airlines, the brand value to enterprise value to brand value is 36% is now. It used to be, again, 53-54% till about 4 years ago. So if you look at it, AAA, very small numbers. Majority of them are AA, A, or A+. The green one, the blue one is 2020. So there is a decline in A, more increase in A+. So that's a good sign. More people have moved there. There's a decline here. So more people have moved to from AA- to A. So that rating is extremely critical. You'll also see a brand value to business value ratio when I show you some of the rankings and the listings, the top 10. Now, what does that mean? The higher the percentage, so you'll see, let's say your intangible value, what I was mentioning about 48% of value being in the intangible, different sectors will have different numbers. If your brand value to enterprise value published in a report says 30%, that means your brand is driving the business success. If it's 2%, your brand is doing nothing for your business. So the higher the percentage means the brand is contributing to the business success. The lower the percentage means the brand is doing very little, nothing. What does it mean? If I were to, let's just say you're a bank and your percentage of brand value to business value is just 4% or 5% or even 10% for that matter. I come and buy you. I don't need to keep your name. I can just throw it out. I can rebrand it to myself. And then I probably won't lose any customers. I probably won't have a negative business impact by changing the brand. So that's where the brand is playing very little or no role in the business success. You may have a fantastic retail distribution footprint. You may have a very large number of customer base for a variety of technical reasons where the government might have mandatory requirements for people to come to you or whatever be the reason. But it happens. There are some Indonesian banks, they're so strong in rural that there's no other choice. People just go to them by default. But the minute a new entrant comes into that market, people would move very, very quickly. So there's no stickiness with the brand. It's just there because there's nobody else. So in that scenario, what you need to then start to look at is how is your brand faring overall. Are people, if you were to sell out to someone, can that someone change your name or would they keep it? Because I'll give you an example of Standard Chartered. I worked there for about 12 years, and we bought, during my time, I was managing the brand globally. We bought, at least I went through 40, 50 M&As, if not more. A lot of the big ones. We bought Korea First Bank in Korea. And what we had to do is a very nice migration process we had to follow, because we could not have just changed everything to Standard Chartered overnight, though we are a 150-year-old bank. The roots are in Asia, Africa, and the Middle East. Very well-known name in majority of the markets, but zero equity, zero presence in Korea. What did we do? We said, look, we cannot do anything. After doing all the research and analysis, Korea First Bank was a failing bank, was a failing brand. We had to buy them out because they couldn't sustain themselves. Yet we could not get rid of the name because it was such a strong brand. We had to call it SC First Bank. And we had a migration cycle. We'd done a lot of analysis back then with Brand Finance to understand what the migration path should be. SC First Bank, we started off with, started building equity, brought in the house colors, etc., brought in the trust mark of the Standard Chartered. Then we moved to Standard Chartered First Bank. And the period was decided based on the scenario analysis that was done early on. From SC First Bank, we moved to Standard Chartered First Bank. Then we dropped SC and then, First Bank, and then full rebranded Standard Chartered. It took us almost 3.5, 4 years to do that migration, because had we done that on the very first day, we would have lost almost 80-90% of the customers. So your brand is a very important asset, but again, how you use it in different contexts and situations is again very, very critical. And there is no one size that fits all, because every time I go for an M&A, I'm just going to change the name. Every time I do XYZ, I'm just going to change the name. So without much ado, I'm going to quickly now tell you who the top 10 are. Number one, again, no prizes for guessing, is Petronas. $13.3 billion is the value of the brand. What does it mean? It means that if you were to buy the Petronas name tomorrow morning, you have to pay them $13.3 billion, if not more. You don't buy anything else except the name. Then you decide how you want to use that name. That name is an extremely valuable asset. You can license it back to Petronas, or you can go and license it to someone else, and people will be willing to pay you a lot of money for licensing the brand. You don't have to really invest in certain business extensions, and you can actually do a lot of interesting expansion and growth without any capital expenditure and without any capital investment by licensing the brand in different markets. That's a very, very good way to grow, especially in current trying times where you still want to grow your presence, you still want to grow your brand, but you have the fundamental challenge of investment drying up, whether through investors or through your own organization. So that's something that you should all consider and look at. I'll give you another example. Sunway, for example. Sunway has Sunway Lagoon, hugely franchisable brand. They don't have to open a Sunway Lagoon everywhere. They've established a brand. They can just go and license it everywhere. I'll give you another example where things went terribly wrong. And we had a discussion with the company before. When Lotus brand was being sold to Geely of China, we had an initial discussion. We warned them to say, do not sell the company lock, stock, and barrel with the brand. The brand is extremely valuable. Keep it with you. Just give the rights for the car manufacturing to Geely, and after that, you can license it in 20 other categories to 20 other people. Don't know what happened, but they give everything away, lock, stock, and barrel. There are merchandise stores in the heart of London City on Oxford Street for Lotus, and those are the kind of extensions that you could have done had you retained the brand with yourself. Similarly, again, Petronas has many franchisable opportunities within their portfolio. The Petros signs in the KLCC, in the mall at the top, that's highly franchisable, just like your Kidzania used to be. I mean, Kidzania was created and it was franchised all over. So there are a lot of opportunities that you have once you create them. 15.2 billion, up 14.2%, good strong growth. Will it be sustained? We don't know, because the sector is going through very trying and testing times. But we feel the recovery is not going to be as hard, because if you look at the what's causing the decline, what's causing the slowdown is really the the closing of the borders. Once those open, things will be different. Maybank 4.2 drops to 3.97, still up from number 3 to 2. Genting drops a place here, minus 5.5, but they're still growing because Genting has dropped so much more. Why? They're in the sector which is the most impacted. But guess what? All this analysis, the financial forecasts, etc., that we use are pre-COVID. So this is actually a natural fall. We cannot attribute this to COVID. So there is something seriously wrong with how the brand is being managed or was being managed, because they dropped huge drop in the value. 23% is not a small drop at all. Tanaga. Utility brands are very, very hard to build because people have very liquidity, but they've done a fantastic job there, I would say, growing very well, 2.4 billion, 2.7 now. It's not easy to build a monopolistic brand, but I think the kind of efforts they make, whether it's CSR, whether it's the brand activities, initiatives, digital applications, making customers' life easier, despite knowing that I'm a monopoly brand, they still do a lot to make everyone's life easier. Sime Darby, again, property sector has its own vows. Here is another very good example of the brand not being utilized. And I'm not singling out Sime Darby here. The entire property sector does the same. I was having chat with someone else in the morning also. You go and buy a house in a condominium, you'll very seldom see that the property, that the builder's name is there. Sime Darby, it will never say Sime Darby XYZ. It'll say Kiaraville, or it'll say the Palm Springs, or it'll say something else. Why are people not using the brand? And we have enough research going around, which we've done over the years, to show the minute you put a Sime Darby name there, it has a very different connotation of trust and quality, etc. And people are actually willing to pay 20% more. But people still want to put it. The reason for that, from our point of view, is very simple. That just shows that the brand understanding is very, very little or poor. Otherwise, these kind of decisions would not be made. The brand is capable of driving the profitability for the business, but it's not being used in that manner. But that's the problem. Except Eco World, which is absolutely fantastic. You will probably not see anything that doesn't say Eco in the name. And that's a very good example within the property sector of using the brand very effectively, using it right, and using it to a business advantage, whereas all the other players, sadly, are quite all over the place. Public Bank, really, really large, one of the largest footprint perhaps, but still falls so much behind Maybank. The market cap to brand value ratio is really, really tiny. It's low single digits, sometimes edges towards 10%, 11%. The banking average for BV, brand value to market cap, is 23 to 24%, which basically means the top 3 banks in all the countries should be at least closer to that average. And if you're not, then there's something seriously wrong. CIMB, again, a lot of business challenges for them. Good stable position. Max has been growing well. AirAsia, Digi, all are doing quite well. So that company is the top 10. I'll just quickly tell you about Maxis. We were called in many years ago. I think this was about 5 years ago. Sandeep Das used to be the CEO, and his big problem was, why do you always split Hotlink with Maxis? And I just look at him and saying, well, you know the answer. Why are you even asking the question? You are consciously building 2 distinctively separate brands. There is very little commonality between the two. One has very different colors, the other is very different colors. They target completely different customer segments. They target completely different channels, etc. The way you engage the people is very different. So you are making a conscious effort to drive 2 brands. Why should I combine them? And that's how people see it. For them, Maxis is not Hotlink, or vice versa, unless you say Hotlink from Maxis or Maxis from Hotlink, or whatever. There has to be a correlation between the parent and the product brands. Otherwise, you are either creating a competitive brand for yourself within your own portfolio, or the contribution of whatever product brand you've created to the master brand or to the parent entity is very little or zero. Strongest brands. Again, I was talking about the ratings and the brand strength ratings and the scores. Petronas, again, it's a double win for them this year. 86.2, 86.3, very marginal difference. But I think the critical part is not necessarily, because once you're a AAA brand, it's not that easy to grow at all. But they managed to keep the brand strength going, even with the 1 decimal. At the top, it is a fight of decimals, trust me on that, because when you're looking at the top 500 global brand rankings, it's the decimals that make the difference, even in the value and in the brand strength. So they're in a very, very strong position overall. In the oil and gas sector, they're actually in the top 5 strongest oil and gas brands in the world because of the investment, because of how they treat the brand, because of how they manage it effectively around the world, not just in Malaysia. They have very little retail footprint around the world in terms of petrol stations, and people always scratch their heads and wonder why they're doing Formula One sponsorship, why they're spending millions of dollars when even Malaysia doesn't have a Formula One anymore. Well, the brand isn't just about where you're doing business, because like I said, it's a magnitude of stakeholders, all the stakeholders. So you have to build the brand from a more holistic point of view rather than just from a very sales focused point of view. DG, the second strongest brand, 87.8, dropped a bit. So they were the number 1. They become number 2. So Petronas goes to number 1. But again, a very, very strong brand. Amongst the telecom players, in fact, they are one of the strongest brands all over ASEAN, not just in Malaysia. Maybank, very strong bank brand. Maxis, again, AA plus has become a AAA. Big jump in the score. So they would have done a lot of things well over the 2 years. And then Public Bank, again, they're getting more and more competitive, and that's what we've been warning all the other banks historically for, saying the day they get their house in order and start focusing on the brand, there will be a lot of shakeup in the ranking, in the value, and how the brands are managed and how the brands are preferred. It's just that they just don't have the right ingredient, the right mix. So the brand strength is very important. Brand value is important. If you have brand strength and brand value as a KPI, that goes to say a lot. Now, the brand value can increase or decrease for 3 primary reasons. It can increase or decrease because of the brand. It can increase or decrease because of the business. It can increase or decrease because of the external factors. You don't control the external factors at all. You don't control the business factors all the time, because there can be regulatory restrictions on how much you can grow. There can be competitive forces doing all kinds of different things. There could be new entrants into the market. Sector might be going through a change, like banks are hit by fintechs, etc. So you don't control all the business elements all the time. COVID situation, these kind of crises, you don't control. What you control is the brand. So what we like to see is the brand should never have a negative contribution to the value. And guess what? Out of the top 10, only 4 brands as of today have a positive contribution to the value. It's Petronas, it's Tenaga, it's Maybank, and it's Maxis. Those are the only 4 brands that have a positive contribution to the brand value. Everyone else has actually had a negative contribution because of the brand. And that's the ROI or the KPI actually for the brand and the marketing, to say, look, at the end of the day, if my value increased from 15 billion to 16 billion, out of that 1 billion, my contribution was 500 million US dollars. Now tell me one of our assets that have delivered that kind of return on the expenditure that I've done on marketing. So it is a marketing ROI. It's a dollar-to-dollar comparison for your CEO, for your CFO, for your board and the management. You just got to start using it if you're not. And those who are already using it, fantastic. Those are the other strongest brands. Celcom, Tenaga, again, moved up. Excellent growth story there. AirAsia dropped a little bit. We see them dropping a lot more probably in 2021 ranking because of what's happening to the aviation sector as a whole. Padini, very strong homegrown brand. Came out of nowhere 4 years ago. Now they're in the top 10, and we just hope that they stay there in terms of brand strength. And that's the reason why they will now have stronger business growth going forward. Dutch Lady, very old, very loving brand for all of us. I'm sure a lot of people have grown up with it and continues to be there. Came into the top 10 now, so that's great news. So top 10, number of new entrants. These are the guys who've entered new. You may not know some of them because most of the entrants are usually at the bottom of the ladder because they're new entrants. They usually come in unless someone like Saudi Aramco, as big as someone like Saudi Aramco, goes for a listing, they come straight at the top. Or someone like, so for example, a Banyan Tree goes for a listing, they come straight at the top. Those things do happen, but most of the times you've seen the new entrants come in more at the bottom part. So they may or may not be recognizable name, but They are there, they're in the rankings, they're going to grow, so something to keep track of. Like I said, the strongest brand is Petronas. I think deserves a round of applause, a virtual round of applause perhaps from everyone for Petronas. 86.2, one of the strongest brands in Malaysia and the most valuable as well. Value improved by $1.8 billion overall in absolute value terms. That's probably the value of all the last 50 brands, so to say. So that just shows the investment and the attention and focus. Now just for discussion, if the value is increased by $1.8 billion, and let's say they spend a billion ringgit on Formula One sponsorship, how and why should that be treated as a bad investment at all? It isn't. Most improved brand in terms of brand strength score, so 51 score going to 61 out of 100. So that's again a great jump in terms of brand strength score. Padini is the highest brand value to enterprise value ratio. I was telling you earlier, the higher this percentage means the brand is driving the business success. The lower this percentage means the business is driving the brand. So 65%, heavily brand driven business. You remove this name, people will probably not enter that fancy shop in Pavilion also. If I put my name there, I use that as an example, even my family will not go and buy the clothes from there. Hapseng, again, in terms of absolute ranking growth, 7 places. So that also shows how slowly the brands have been growing. I mean, 7 places growth is the highest ranking growth in Malaysia, which shows that not very many big jumps are happening in terms of increase of value and increase of brand strength index. Here are some more. Okay, those of you who want to take out your phone and start taking pictures, now would be a good time, because we're not releasing this in the public domain as yet, except for the top 10. I'll tell you where you can actually access it in just a moment. Petronas. Now here is the one that I was telling you about. So the brand value change, you can see how many reds are there. So very few brands have actually grown in value. Most have gone down. And that's without the COVID crisis hitting them. Interesting thing is, look at the number 1, 15 billion. Look at the number 20, 516 million. That's about it. And see how quickly everything drops. 15 to 3, then to 2, then to 1, then goes all the way down. Coming back to COVID, very quickly. COVID is going to have a negative impact. Certain sectors are going to be more badly hit than the others. We've done a lot of analysis around the world. We started that way back in April. We have some updated numbers as well at regular intervals. COVID is going to impact negatively a lot of sectors, and it is here to stay. So nothing is going to change magically. But here's the silver lining. In terms of value impact, there are 2 parts of the calculation. One we look at is the 5 years, immediate next 5 years, which is where we look at your forecast, your growth, etc. That component is a smaller component that contributes to the value. When we look at the perpetuity calculation, which is because the brand is not going to die in 5 years, it is going to live for, let's say, 100 years. So when we look at the perpetuity value, so let's take Petronas, for example. Out of the $15.3 billion, $15.2 billion, the perpetuity value would be probably 10 to 12 billion, and the 5 billion is going to be value for the next 5 years in the what we call the period where we have the forecast and the growth, etc. Now, out of that 5 years, probably 1 or 2 years are going to get impacted because of COVID. So the intangible hit is now, yes, but is it going to last for a very long time? People who are focused on the brand, the short answer is no. You're going to have much quicker ability to bounce back. You'll do more business faster than others. John mentioned earlier, it's about the brand, how focused you are, and it's about the trust that the brand enjoys with the people, and that's really going to help you bounce back quickly. And the true indication of that is your brand strength index. Now, if you're a AAA brand and your competitor is a AA brand, there it goes. I mean, the person who has to worry more is your competitor, not you so much. But if you're both AAA brand and the difference is very marginal, then you need to really worry about, because they can get ahead of you or someone else can come and take over things, etc. So this is a very important score to keep track of, just the same as the value. A lot of times we've seen people sort of beat themselves up. Oh, I'm not going to go to the management. What's the point? I've dropped in value. I mean, take Virjaya, for example, 15 dropping to 16, 13 dropping to 17 IOI. You need to look at it in a more holistic context of what's happening to the sector as a whole. 2020 rankings for banks, financial institutions have been particularly bad. Almost, if I look at ASEAN, there are about 39 banks which we've ranked in ASEAN. Almost all of them have lost value. Very few have actually gained value. However little the loss might be, they've all lost, because there are different sectors which are stressed. That's not going to stop, because currently the exposure to some of the sectors, whether it's tourism, whether it's retail, whether it's aviation, is very, very high for the banks, and those sectors are not going to perform, real estate, etc. So the non-performing sectors are going to put additional stress. Consumer lending is going to put additional stress on the P&Ls and the balance sheet. The delinquency ratios for loans are going to go very high. We don't know what's going to happen to the bad debts, etc. A lot of provisions are being made. So there are a variety of factors that have actually impacted you. So look at it in a more holistic context, which is, how is the industry performing as a whole, and what is my position within the sector, within the industry, rather than look at it in isolation of my 14 has become 16, so I've performed poorly. No, not always. The other thing is, how many new entrants have come above you? So if 3 or 4 brands which were historically below you have gone ahead of you, and that's pushed you down by 1 place, that's actually a positive thing, because if 3 brands have gone ahead of you, you should have dropped 3 places. But guess what? You've dropped only 1. So you effectively gained 2 places. And that's another way to look at it. So don't just beat yourself up by looking at my ranking is dropped or my value is dropped. Look at it in a more holistic context, is what we always urge. Okay, coming to the COVID. Right hand side, strong negative impact, almost 20% impact on the enterprise values. Now a lot of this analysis is done at a company level, at an enterprise level. Automotive sector, construction material sector are going to be the worst hit overall. Then comes banking, transport, real estate, and leisure. Roughly about 10% impact on the overall market cap, overall values, etc. Food, apparel, telecom, utilities, more or less there. Yes, there was some impact, but that's going to sort of get neutralized over the next few months. Then you have a lot of other technology brands, huge positive impact. So again, one person's gain is another person's loss. I was talking to my friend who's the CMO for APAC and Africa, etc. For Kellogg's. They have sold so much products in the short period of last 4 or 5 months. It's not funny. The shipping industry is doing record business for the last 4 months. So there are sectors which are doing very well, and so the economies are not going to be as badly crashing as we all think. Bio, pharma, electrical, all the sectors are doing quite well. Just looked at banks as a whole. Just look at the market cap since January 2020. So you see the 2 numbers. One is Jan to October, one is Jan to May. So Jan to May and Jan to October. Again, the dark one is the second one. Jan to October was less. So again, if you look at the Indonesian banks, again, the crisis is going to hit them harder. You look at Singapore banks, not so much like the Indonesian bank. There are signs of recovery in Singapore. There are signs of recovery for some. RHB is showing better market cap growth, not as bad. There's signs of recovery, whereas for Hong Leong, there isn't. So you need to start to look at some other competitive information. What happens in one country doesn't necessarily happen to the other. So we can also predict in a way by scenario modeling, by scenario analysis, which brands are going to be less impacted, which brands are going to be more impacted. So if that's a question on your mind, by all means, you can write to us separately. We can do a nice analysis to say what is the likely impact for your brand, for your value, for your market growth, for your pricing, etc. Now, last few minutes. Now, where do you get the information? Invest Weekly is the place where the full results are going to be published 1 week. It's a e-publication by Share Investor Malaysia. You can log in there. You can take out your cameras. I'm just going to show you a QR code. Otherwise, just Google it and log in. Those who subscribe to it are going to get the next 3 issues for free, and that's where you can actually see the rankings in full, which is where how we'll continue. Even on our own website is behind a paywall. So those of you who are looking at the rankings, the full 100 list with the values and everything should go here, or you can contact Edward or Sharon on these phone numbers, and then you can very quickly get it and any analysis that you need. All right. So where do you go from there? Brand value. You can look at the detailed analysis of your own brand. You can start to look at that if you wish to. The report is going to be available very soon. There's a hard copy version. If anyone wants, just write to us. We'll be happy to send it over to you. Soft copy is there. You can use the ranking and your if you're a strongest brand, etc., or your sector preference, you can use that in your communication going forward. Those are all the options that are available to you to benefit from it. And here are some examples of companies that actually use it. Just shows that they're a little bit more cautious about the brand, and then they use it. You can. We usually hand out a certificate. Given the COVID situation, we are not doing it in person. But if you do want one, just write to us and we'll courier it over. That's all. I'm in for some Q&A if there are any. Sorry about the bit of an overrun.
Thank you, Samir. I'm sorry you couldn't be with us here. The plan was to have you sitting here, socially distanced, of course. But under the current situation with travel restrictions, we got to do this virtually. I'm going to go straight on to some questions that have been handed to me because we are running a little short on time. Samir, there are two power T's. I call it the Tesla and Top Glove. All right, they're two powerful brands, right? Now, Tesla is reported not to have made a profit as yet, so it's claimed, right? Yet, their share price has escalated fourfold, right? In the last year from $100 USD 100 to over 420 USD in the last 12 months, all right? Yeah. Now, Top Glove, whose demand has gone up significantly over this period, and is actually out of capacity, I believe. Yes. And their share price has also escalated fourfold, right? From 2 ringgit to close on 9 ringgit, okay? What's your perspective on what's driving these two brands to their success or their share price and valuation right now?
So there are a few things. And again, first of all is the confidence that the market has in the companies and in the brand. So it's the confidence that's in the company and the brand which really drives the success or the future success. The share price is an indication about how the market perceives them going forward. So it is not really so much about today, but how the market perceives them going forward. Of course, the more people buy, the more trading happens, the share price goes up because people are more confident that this company, this sector is going to do well. Now I'm going to look at, tell you a bit individually. Tesla, what's driving the price? Extremely future focused always. That's the first point. They're really about future all the time. They got into the SpaceX, so they've launched the spacecraft, which really was a fantastic thing for them to do. But the bigger thing that's really contributed very positively is the China factory. Now they've gone into a country where the potential to buy or sell their products is so large, phenomenally large. The market, China as a market, is getting extremely brand conscious, and they are really sitting on a huge growth opportunity there. It may come 3 years from now, it may come 4 years from now. It's a very large investment. It's probably one of the largest plant outside of the US, and that's what giving the confidence to the customers to say, look, their sales are not going to get as badly impacted. Whatever is happening between the two countries with the trade corridor and trade fights, etc., the fact that Tesla has a plant in China and they're going to manufacture locally and distribute and sell locally just gives that confidence to the customers, to the investors, to everybody. So it's all about the confidence. Top Glove, again, on the other side. Now, these are the kind of things that don't suddenly, just because the pandemic has sort of dialed up the whole pharma sector, doesn't mean they're all going to disappear literally overnight. There are countries which have regular ongoing orders with them. Again, they're not just sold out now, they're probably sold out for the next year and a half. So that's one part. Second part is the habits don't change. Once people get used to the certain level of hygiene, it is very hard for people to just shake it off one fine morning. The same thing we saw happen with syringes when the thing was there for HIV. The same thing we saw happen with the condoms when the HIV thing happened. You don't just suddenly get out of the mold and think, now the problem is over, let's throw it away. So it will continue. Probably the masks are not going to be as widely used, but gloves, etc., The hospitals are now catered to the hygiene. There are a lot of hospitals which are just doing things for no reason. Now they have access, they have, so a lot of these things are driving the future growth of the business. So the share price is growing because of the future potential and the future promise that the investors see.
Samir, I hear you. I can't help also feeling that Elon Musk is a brand in his own right. And this love for this brand must also be contributing to brand Tesla and to its valuation, coming from a soft powers perspective. What do you think?
Well, yes and no. He's also a problem child in many ways for the organization. Sometimes he becomes a headache for the investors just the same. The thing is, yes, and it's always been a debate about the people who become larger than the brands that they run or manage. But I think the customers really draw a fine line. So in a certain audience segment, he is the brand bigger than the products. In a certain audience, the product brands are bigger than him. I mean, the same debate happened when Steve Jobs was supposed to leave Apple for health reasons, saying, will the organization survive? And I only have one thing to say, and there is enough historical evidence to show nobody in this world is bigger than the brands. And that's why you should focus more on the brand and not so much on the personalities also. And there's a learning there as well. It helps for the jump start, but after that, the brand must take over. Otherwise, the organization is going to be in a lot of trouble in the long run. I mean, Steve Jobs is one. Look at Richard Branson, for example. So there are a lot of examples. Our own Mr. Vijay Mallya.
Time for perhaps two more questions, and these have come up on the chat box, and we want to go through this very quickly. Post-pandemic, can premium value brands still hold their position of today?
Well, yes. There is no reason. There's nothing that tells us that the premium brands are going to all disappear. As you mentioned earlier, trust is a very big driver, and premium brands are more trusted. If people are very careful about what they're spending now, because the consumption of whatever they spend on is those many times higher. Gone are the days when people just buy it and put it somewhere and forget. Now they are actually sitting at home, whatever they're consuming, they're actually enjoying it. And that's where you cannot fool people with a substandard product. You cannot fool people if they don't trust the brand. So trust is very, very important. And the premium brands are really in demand. Louis Vuitton has sold tons of hand sanitizer.
And perhaps there may be some, due to the shrinking wallet of consumers, they may gravitate towards in-house brands or generic brands.
Well, yes, but having said that, and you're absolutely right, but even there is a brand. You cannot just white label, and I'll use an example of cold storage here in Singapore. There's a brand called Meadows that's cropped up in literally every single category, from chips to shampoos to detergent to jams to nuts to cereal bars to everything. And they're wearing, it's their own in-house brand. They're selling a pack of truffle chips for $1. And then you think, there must be something seriously wrong. Nobody can sell a pack of truffle chips for $1. It is absolutely fantastic in terms of taste, quality, everything. So it's a trial price. But guess what? I think they're doing a really, really phenomenal job by creating a brand which is not cold storage. Because unlike some of the other players like FairPrice, they created their own house brands called FairPrice. Now,
hey, Samir, time for one more question. Sorry, I didn't mean to cut you off. In relation to airline brands, there's something that came in. The refusal or reluctance to provide full refunds to customers. Will the brands be damaged because of this?
For years to come. This is something that you do it once to the customer, it doesn't go away. A bad experience, a bad word goes around many times more than a good experience and a good word. And I have friends who personally experienced that. I have family who personally experienced that, both good and bad. Like, you always talk about a bad experience. You may forget to mention a good experience, but a bad experience nobody ever mentions. Nobody ever forgets to mention. So that's the real test of it.
Absolutely. I couldn't have said it better. In closing, thank you, Samir. Thank you, IAA Malaysia. And most importantly, thank you to the 400 people who registered on this webinar. Good night, Asia Pacific. Good morning, US. Good afternoon, UK, Europe, and Africa. Keep well and stay safe.